Are you interested in generating income without actively working for it? In today's digital age, cryptocurrencies offer unique opportunities to earn passive income. But how can you effectively leverage these opportunities to build a steady revenue stream? In today's video, we will delve into the various ways you can earn passive income using cryptocurrencies. From staking and yield farming to lending and masternodes, we'll cover the different methods and provide insights on how to get started with each. Understanding these strategies can help you make the most of your crypto assets and generate earnings while you sleep. Let's get started. But before we continue, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on any amazing and entertaining content. Also, for more updates, be sure to visit our website regularly at cryptogalorenews.live and follow us on Instagram at cryptonewsgalore. Staking cryptocurrencies. Staking involves participating in a network's operations by locking up a certain amount of cryptocurrency to support blockchain functions such as transaction validation and network security. In return, participants earn rewards, usually in the form of additional cryptocurrency. For instance, with proof-of-stake (POS) networks, staking allows you to earn interest on your holdings, similar to earning interest on a savings account. The more you stake, the higher the potential rewards. But it's essential to understand that staking often requires you to lock your assets for a specified period. Additionally, choosing the right staking platform and understanding the associated risks, such as market volatility and platform security, are crucial steps to ensure a successful staking experience. Yield farming. Yield farming, also known as liquidity mining, involves providing liquidity to decentralized finance (DeFi) protocols in exchange for rewards. By depositing your cryptocurrency into liquidity pools on platforms like Uniswap or Aave, you help facilitate trading and borrowing activities. In return, you earn a portion of the transaction fees or interest rates generated by the protocol. Yield farming can be highly profitable, but it also comes with risks, such as impermanent loss and smart contract vulnerabilities. Impermanent loss occurs when the value of your deposited assets changes compared to when you initially provided liquidity. It's essential to research different yield farming opportunities, understand the potential returns and risks, and diversify your investments to mitigate these risks. Crypto lending. Crypto lending platforms allow you to lend your cryptocurrency to other users or institutions in exchange for interest payments. By using platforms like BlockFi or Celsius Network, you can deposit your assets and earn interest over time. The interest rates offered by these platforms can be significantly higher than traditional savings accounts, making crypto lending an attractive option for passive income. However, it's important to evaluate the platform's credibility, interest rates, and loan terms before committing your assets. Additionally, consider the risk of default by borrowers and ensure that the platform uses adequate security measures to protect your funds. Masternodes. Masternodes are special nodes in a blockchain network that perform additional functions beyond regular nodes, such as transaction verification and governance. Running a masternode requires holding a significant amount of the network's cryptocurrency and operating a server that meets specific requirements. In return, masternode operators receive rewards, usually in the form of the network's native cryptocurrency. While running a masternode can be a lucrative source of passive income, it requires a substantial initial investment and ongoing maintenance costs. It's crucial to understand the technical requirements, costs, and potential rewards associated with masternodes before getting started. Crypto mining. Crypto mining involves using computational power to solve complex mathematical problems, validating transactions, and securing the network. In return for this work, miners receive newly minted cryptocurrency as a reward. While traditional mining can be resource-intensive and costly, cloud mining offers an alternative where you lease mining equipment from a service provider. This method allows you to earn passive income without managing the hardware yourself. However, cloud mining contracts can vary in terms of fees, terms, and profitability. Carefully review the terms of any cloud mining contract and consider the overall costs and potential returns before investing. Using stablecoins for passive income. Stablecoins are cryptocurrencies pegged to stable assets, such as fiat currencies like the US dollar. They are designed to maintain a stable value, reducing the volatility often associated with other cryptocurrencies. One way to earn passive income with stablecoins is through lending platforms that offer interest on deposits. For example, you can deposit stablecoins into a savings account on platforms like Nexo or Compound, which pay interest on your holdings. This strategy can be particularly appealing for those seeking stability and predictable returns. Additionally, stablecoin lending often involves lower risks compared to more volatile cryptocurrencies, but it's still important to consider the platform's reputation and security measures to ensure the safety of your assets. Participating in crypto affiliate programs. Crypto affiliate programs offer another avenue to earn passive income by promoting cryptocurrency platforms and services. Many exchanges, wallets, and trading platforms have affiliate programs that provide commissions for referring new users. By sharing referral links on your blog, social media, or other online platforms, you can earn a percentage of the fees or commissions generated by your referrals. This method of earning passive income involves minimal investment and can be a steady source of revenue if you have a strong online presence or a targeted audience interested in cryptocurrency. It's essential to choose affiliate programs with reputable companies and attractive commission structures to maximize your earnings. Investing in cryptocurrency index funds. Cryptocurrency index funds are investment vehicles that track a diversified basket of cryptocurrencies. They offer a way to invest in a broad range of digital assets without needing to manage each one individually. By investing in an index fund, you can earn passive income through appreciation and dividends if the fund distributes earnings. Index funds reduce the risk associated with investing in a single cryptocurrency by spreading your investment across multiple assets. While this method requires some initial investment and research, it provides a way to benefit from the overall growth of the cryptocurrency market. Look for index funds with transparent management fees and a strong track record to ensure that your investment aligns with your financial goals. Automated crypto trading bots. Automated trading bots can help generate passive income by executing trades on your behalf based on predefined strategies. These bots analyze market data and execute trades according to algorithms designed to maximize profits. For example, bots like 3 or CryptoHopper can be configured to trade cryptocurrencies automatically, leveraging market trends and patterns. While trading bots can potentially increase your returns, they also come with risks such as algorithmic errors and market volatility. It's crucial to select reputable bots with robust performance histories and to regularly monitor their activity to ensure they align with your investment strategy. Crypto dividends. Certain cryptocurrencies offer dividend-like payouts to holders of their tokens. These dividends are typically distributed based on the amount of cryptocurrency you hold and can be a source of passive income. For instance, some blockchain projects distribute rewards to token holders as part of their incentive structure or network participation. To benefit from crypto dividends, you need to hold specific tokens in a compatible wallet or platform. This method can provide regular income, but it's essential to research the project's legitimacy, dividend structure, and potential risks before investing. Exploring passive income opportunities with cryptocurrency opens a range of strategies, each offering distinct advantages and considerations. Whether you choose staking, yield farming, lending, or any other method, understanding the mechanisms, risks, and rewards associated with each option is crucial for successful investment. By diversifying your approach and staying informed about market trends, you can maximize your passive income potential in the dynamic world of cryptocurrency. We hope you found this video insightful and informative on how to earn passive income with cryptocurrency. If you enjoyed the content, please give it a thumbs up and subscribe to our channel for more in-depth guides and tips on cryptocurrency investments. For additional resources and updates, visit our website at cryptogalorenews.live and follow us on Instagram at cryptonewsgalore. Thanks for watching, and we look forward to seeing you in our next video.